Now, in addition to these four kinds of payment that could be included in the definition of lease payments, one more thing will have to be included in the definition of lease payment, and that is the guaranteed residual value. For that, we should first look at the definition of what the guaranteed residual value is, and then we'll talk about how and how much to include that in our consideration of lease payments. So first of all, the residual value is the value of the asset at the end of its useful life. So it might be received by selling that asset in the scrap market or selling it to someone who might be able to use it at that point as well. So that is a residual value. But when we are entering into a lease contract, there might also be a guarantee to the lessor of what that value would be. So according to the standard, residual value guarantee is a guarantee made to the lessor by a party unrelated to the lessor that the value or part of the value of the underlying asset at the end of the lease will be at least a specified amount. For example, if the lessee guarantees that it will use the asset so properly that at the end of the lease term, the residual value would be at least $50, and for that, the lessee also provides a guarantee that if the value falls below $50, the lessee will make the remaining payments. We will think about two scenarios. First is when the residual value at the end of the useful life might be lower than the guaranteed amount, and the second scenario would be when the residual value may be higher than the guaranteed amount. For example, if the guaranteed amount is $50, that the lessee has guaranteed the lessor that if the residual value falls below the $50, I would pay the remaining amount. So now imagine if at the end of the useful life the value of that asset falls to $30, which means that the lessor will be able to sell that asset in the market for $30, and lessee will have to make a payment of $20 extra, right? In that case, $50, which is the guaranteed residual value for lessor, will be a lease payment. However, in the case of lessee, because lessee will only be expected to pay $20, therefore only $20 will be included in the definition of lease payment for the lessee. So here we have a bifurcation, we have a difference, we have a distinction between what would be included in lease payments in terms of residual value guarantee. So for the lessee, it is the amount that the lessee is expected to pay at the end of the useful life to the lessor. In case of the lessor, is the amount that is guaranteed to him in respect of the residual value of the asset. Similarly, if the value of the asset increases above 50, for example, if at the end of the useful life the asset's value is $60, in that case, the lessor can simply sell it outside at $60, but because he has received a guarantee for $50, those $50 would be included in the lease payments to be received by him. However, in the case of lessee, because the lessee is not expected to pay any amount to the lessor because the value of the asset is already over and above the guaranteed amount, in that case, none of the amount would be included as part of the lease payments in respect of the residual value guarantee. So we now know that residual value guarantee is a guarantee that is made to a lessor by a lessee or a party related to a lessee or a third party that is not related to a lessee but also not related to the lessor, which means the lessor is basically getting the protection from someone else, right? So such guarantee will be included in the lease payments of both the lessee and the lessor, but at different amounts. For the lessee, the guarantee amount would be included at the amount that the lessee is expected to pay at the end of the lease term. And for the lessor, it would be included at the amount that the lessor is guaranteed to receive at the end of the lease term. So the lease payments have 5 components. First is the fixed payments, including in substance fixed payments. Then we have variable lease payments that depend on an index or rate. Then we have the exercise price or purchase option if the lessee is reasonably certain to exercise that option. And then we have the payments of penalties for terminating the lease if the lease term reflects the lessee exercising an option to terminate the lease. And lastly, we have the residual value guarantee. And we know that for the lessee, it is the amount that the lessee is expected to pay at the end of the lease term in respect of the guarantee. And in case of the lessor, it is the amount that the lessor has been guaranteed by someone else, by an unrelated party to himself. So far we talked about all kinds of payments or a promise to payment which have to be included in the definition of lease payment, which have to be included in the lease accounting. Now there's one more kind of payment which may optionally be included in the lease accounting depending on what choice a lessee has made. And these are the non-lease components. Now what is a non-lease component? For example, a lease contract is for 5 years and for the right to use of an asset for which the lessee will pay $100 each year to lessor. Now what if the lessor also promises to the lessee to provide service and maintenance of that asset? And for that service and maintenance, the lessor requires extra $10 every year, which means that in addition to $100 for the right of use of that asset, the lessor is also demanding $10 for service and maintenance. And those $10 are essentially not a part of the lease transaction because they are not for the right of use of that asset. Right? Now, in case of lessor, this is not part of the lease payment and the lessor will have to be recording these payments separately in income, which means the lease payment would be $100 each year and $10 each year would have to be recorded by the lessor separately as income. But for the lessee has a choice. A lessee can either choose to add them to sum them with the lease transaction and treat them as a whole, treat the entire $110 as a lease payment and treat the whole transaction as a lease transaction. Alternatively, a lessee can also choose to treat them separately. So when a lessee chooses to club those two components, to combine those two components into a single lease component, in that case the additional payment, the non-lease component payments, also have to be included into the definition of lease payments.